Greetings, greetings, greetings. You are now tuned into the Vault. Trust Christian, own nothing, control everything. Just want to thank you for tuning in live, listening, replay. Always appreciate everybody that tunes in live, listens in the replay. This is the Vault episode 450 OPM forward slash your money. Kind of want to say like over your money, but it's not really a versus. So definitely want to talk about that today in this episode. This is the Vault 450 OPM over your money. And so, really, just wanted to talk about this because we got a workshop coming up focused on asset protection, and we definitely want to engage people in a conversation in an environment that we're in, even currently as we speak. Just on a daily for a few days here, engaging in the right environment, engaging in an environment with, obviously senior trustees, senior asset managers, and what we see is obviously as a senior asset manager, you're managing not just your money, you might be managing OPM. And so we're talking about this from almost a perspective of money manager due diligence and diligence or financial prudence. So it's not legal advice or financial advice. It's good to know about financial prudence and things of that nature. So we're going to talk about it from that perspective where OPM, other people's money, your money, and over your money, it's almost asking you what money is the most valuable money. And that's why we specifically didn't do a versus because it turns into that. What money's more valuable? Should we use our own or should we go use other people's? And so these are the conversations that we wanted to have openly because it seems as though, obviously, in certain environments, other people's money is thrown out the window when you have bad financial management. Because when you see bad financial management, is it really bad financial management on the manager for their money? And then what happens in the case where there's bad financial management, such as recently the FTX situation, where there was a senior manager of funds, a custodial of funds, custodial of an exchange. This is really supposed to be an exchange, so they really wasn't supposed to hold no money. But you don't know how these companies make money, do you? These companies are billion-dollar companies, supposedly. We're in the era that you saw a crypto company that was a billion-dollar company just get wiped off the face of the earth overnight, quietly. Less than a 10-year-old company just got wiped out. It's filing for bankruptcy. You're not even a 20-year-old company. You couldn't stand 20 years at a time. But you were doing what? Trying to help the little guy out. You were trying to get the little guy an opportunity to do black market transactions. That's what just happened. They allowed the little guy to get his money in these exchanges and coins and this, that, and the third. And then the little guy supposedly just lost out. OPM versus or OPM over your money. What's more important, your money or OPM? How do you manage other people's money as managing your own? Are you a little bit more cautious with other people's or are you risque? When you see these risk managers that are risque, obviously he doesn't care about it as much as his own. Because these guys and girls, whoever they are, when you read these stories of them getting away with not just a couple thousand, not just even a couple million. We're in the era of the billion-dollar companies going under. How do you not see that? So that already lets you know you're worthy. Because if somebody could raise $1 billion and it go under, that lets you know you wasn't worth anything from the beginning. It didn't matter if you had $1 billion or not. It didn't matter that you had $1 billion or you had $800 million assets under management or you have $500 million assets under management. The company has said, guess what? We read on the episode recently what the customers that had money locked up in the exchange are. Oh, you should have had the cold wallet. Oh, you should have had the hard wallet. These are the type of things that you hear on the back end. But if the coin went down in value, what is it worth on the wallet or not? We actually seen a lawyer in the past 24 hours recently says, "Oh, I got a law firm that specializes for sure in the crypto space." You got a whole firm built around this. Maybe they didn't start there, but now they got a firm dedicated to this, and maybe they weren't even speaking the complete truth, but they got a complete division dedicated to this. We could talk about this crypto stuff because that's all it's all built off is the little guy's money. It really is. Oh man, it's supposed to be transparent. It's supposed to be a private. First of all, it's not even a private ledger. So let's talk about it. So supposedly blockchain technology is supposed to be private. It's supposed to have a private ledgering system. So people, OPM, the little guy, can use other people's money, give other people money through a term that we heard today. It's almost like a instant payment. That's what it's kind of called. It's a payment that can go from one person to the next. It's no so-called bank routing fees or whatever these things that are going on supposedly on the regulated market. These are black market transactions, quote unquote, and that's the facts. That's why this company was able to literally raise $1 billion and go under. That's the facts. They went under. They $1 billion. They were 20 years ago. There was no such thing as FTX. 15 years ago, was it a such thing? Let's Google that. How old is the company FTX? Wow, y'all don't even want to hear this. Y'all don't even want to hear this because you don't want to know that the company was started in 2019. You don't want to know that. You don't want to know that. This company was supposedly $100 million company, $1 billion company, and it's a bankrupt company right now. That's the facts. They going through the bankruptcy proceeding. So can somebody buy this exchange out? Don't put it above the system. Can somebody buy out a company in bankruptcy proceeding? That's business. So this is OPM once again. You think these guys aren't out trying to raise funds right now? Maybe they have a bad name. Well, maybe they're showing bad financial management. Maybe they're showing bad financial management. They took in some money. That's called the little guy's money. And then supposedly the company somehow squandered it very quickly. Here we go. 2019 to 22, less than 10-year-old company has squandered billions. But this is the OPM era. Oh, go get OPM for your business model. Go get the OPM for this. Go get OPM for that. It's nothing better than using OPM. But is OPM over your money? See, we're going to talk about it from a different perspective now. A lot of trustees would appreciate this. We're going to talk about it from the perspective that when you want to engage with certain investors, they want to see you with your money in the deal. They want to see money in your investment. They want to see that you have, skin in the game, as they call it. They want to see that you got skin in the game. They want to know that you got, how much money did you put in of your own? That's what the investors say at higher levels. They're not just saying, oh, we don't mind giving you money or we don't mind using OPM. They want to know how much skin you're going to have in the game if you're using other people's money. Are you going to treat it like your money? Or are you going to treat it like your money? That's the question. Are you going to treat other people's money differently than your own? And these are just ethics questions when you get into that space where you hear, and have conversations with senior asset managers, risk managers, and they have those conversations of, you know, more of an ethics conversation, more of a principles conversation. What is your code of conduct? Because people that are going to do business with you, obviously, or people that are going to engage with you, when you talk about other people's money, they're not just possibly going to do one transaction with you. They may do multiple transactions with you. And when you see this from when you say, "Oh, I want big money," or "I want money from people that have a lot of money," they're looking to build relationships too. They're looking to invest in a relationship, not just invest in, "Oh, I'm going to give you money for the one time. I'm going to give you money because you gave me a good quality pitch this time." It's not to say you're never going to come back for money, but when you're saying, "Oh, I need money, OPM, I'm going to get OPM money," and they're sitting here saying, "Okay, so do you only want money one time?" These are the questions that they're thinking in their head when you're asking them for their money. I'm gonna get other people's money. Whose money are you getting? Are you getting a little guy's money, or are you getting the big guy's money? The guys that got millions of dollars to loan you or give you as an investment in your situation. It's not a joint. Sometimes it could be a joint venture. These guys are telling you what they want. They have a way to structure the deals. They're not going to just, they're obviously not just going to give you money. Not just going to give you money. Oh man, it's hard to get, money. Whatever. It's never going to be easy to get money, obviously. But you can raise capital. So obviously that's the whole goal. You say OPM, that means you got to raise capital, right? Right. You got to raise capital. OPM, other people's money. You're raising other people's money, raising the money for the projects that you're working on. But when you get that capital, how do you manage that capital? Are you a good fiduciary? Are you a good steward? Do you have a code of conduct for how you're going to, quote unquote, do business? How you're going to manage the money? Do you have a standard operating procedure? These are things that when you really look into the positions that people may be in, this is what we're aware of. People say, "Oh, I need to go get other people's money." But do you know what the perspective or the thoughts are of the people that you're asking for their money? Do you know that they want to do transactions, not just one? You know they actually wanted to get into a series of transactions? Because they're not just looking to sometimes give out money one time. They're actually looking to do and build a relationship. It's interesting to sit in a room recently with a bunch of high net worth investors, and they literally said that they're friends with some of the people in the room. It's kind of interesting because obviously that comes over years of relationships, but then you start hearing that people are going to different people's events that they're holding too. So not only are people doing their own events, people are going to each other's events, and that's even a significant move, quote unquote, and the level of leadership when you talk about that from leaders going from one event to another leaders event, just to pretty much build that relationship. Not even always, and leaders aren't always doing stiff sit down events for leadership events. Leadership events nowadays are very when they do about the team building stuff. A lot of leadership events are team building events where people are doing like a lot of physical activity events. They're doing a lot of outside door games type stuff nowadays. Those are kind of like your leadership corporate event type events. They're not sitting in some room just receiving awards. They're actually out like team bonding. They call it team bonding and stuff like that nowadays. So these investors for sure. Even one of the investors recently we talked to, they were like, "Yeah, you think people turn down tickets to front row to the game?" It's like, of course, that's how you win over your guys, of course. We don't want to call it bribery, but we know obviously when you're looking to smooth over investors, if you, the person that's looking for money, can show, "Oh, wow, hey, we got some tickets here," entertaining your guest, you know, that's very important to be able to have tickets to, whether it's a front row seats to a game. Um, once again, investing in a relationship by doing outside activities other than just work, and really just trying to meet them in a common place other than work, if you can, which is obviously challenging. People have busy lives, and it's challenging if you're just doing business, then get it over in their personal life and do business with them, or excuse me, not do business with them, but get over in their personal life and kind of, do more relaxed things, but also do leadership events that we've seen people do leadership events. People go to each other's leadership events that they do because people are in different niches. You're doing leadership in your niche. You're not just doing leadership. You're doing leadership from your niche perspective too. Specifically, if you come from a specific niche, every niche has a leadership. That's a fact. So, you definitely, you invest in getting around a leadership of your particular niche. That'll also help you get other people's money, and specifically in people in your niche. So it's interesting to hear this perspective out here nowadays about OPM, and we just wanted to have that conversation of, do you care more about your money than other people's, or do you care more about other people's than yours? And is your management differently for yours and other people's? Now, it's interesting because you would almost say, well, if I'm going to have a good financial advisor, that must mean that he's a good financial manager of his own money. And it's interesting because you could almost say, you could argue that, well, is that true? We're not going to argue that. That's not the case. Everybody has a personal life. And we're bringing this up because we actually know that, yes, some asset managers manage other people's risk because they're detached emotionally from it than their own capital. But once again, when you get around certain fish and they say, how much have you put into the game? They do want to know how much you've managed your money in the business venture or the idea. You think an investor doesn't want to know that you pay for the patent, you pay for the trademark, that you pay for the IP, that you paid for, these things that usually cost companies money on the front end before they come along? They want to know how much money of your money did you put in. So that's why we specifically didn't do a versus, because it can seem like, well, which one's more important? Are they more important? And once again, we want to ask those questions for the dichotomy reason of, well, if that's the case, are the best financial managers good financials of their own money or other people's? And can they mismanage one or the other if they're in that field, which has to be true? There's a broad spectrum of people. Sure, you got some guys that are great with theirs in both, and then you got some people that just aren't. But once again, there are people that are really good, obviously, managing other people's risk. So OPM, are you managing other people's risk? Yes. When you deal with other people's money, are you looking to give them a return? When you talk to them, are you giving them a pitch for what their return's going to be? These are questions that we go over in trustee training. These are things that we go over in the trustee training because there are trustees that go through trustee training. They obviously want to raise capital. There are many trustees that are raising capital. There are many trustees that have gone through that process. Some of them gone through that process. Some of them are raising capital. Some of them are looking to raise capital. Of course, OPM, they're looking to raise money from other people. Yes, we've seen it for years. Sometimes people try to sneak into the event and dang near pitch their deal. Appreciate New Jersey for tuning in live, listening to replay. Always appreciate New Jersey for tuning in live, listening to replay. So once again, if we're talking about risk management, we got to talk about that from both sides, not just from the your money perspective, but from the OPM perspective, because there are people that manage other people's money better than they manage their own. And they're managing risk. How do you feel about risk for yourself? How do you feel about managing risk for other people? There can be this is how you know people have an emotional connection to the money. And that's how you know that that's true. You can't say you don't have it. This is a clear divide of having an emotional connection to money because people definitely are going to be possibly a little bit more risque with other people's money than their own. But that's not always true. There are people, and the vault, trust, correction, and vault. You have to just have good investment parameters and good risk management skills, and you can always improve your risk management skills. Whether that's risk for yourself, whether that's risk for other people's money. But if you're going to be able to manage it was almost safe to say if you can manage risk well for yourself, you should be able to manage risk well for other people. But that's not always a finite truth. either. So we wanted to have this conversation about other people's money because there are so many people that say, "Oh, I want to use other people's money." But you have to know that people have an emotional connection to money, whether they're giving you their money or whether you're asking for money and now you have an emotional relationship to their money or not an emotional relationship to their money. And people want you to actually care about their money. Yes, the people that's giving you their money, they want you to care about their money. Oh, they want you to have an emotional connection. How quick are you going to get me back my money? How quick are you going to give me back my money? And how much more are you going to give me outside of that? If you're talking as an investor, yes, that is the thought process. So people can't say, "Oh, well, I don't want that person to have an emotional connection to the money." Well, even if you're an investor and you don't have an emotional connection to the money, don't you want that person to care about the money? So this is why you see investors, they don't want to invest in the numbers, they want to invest in the story. They invest in the story. Unfortunately, because you do want to look at the numbers, but quality investors are wanting to hear the passion of the idea. They're wanting to hear the story of the business, not just the numbers. Oh, I'm in a great industry. The numbers are going to be great. Dibbity dabble dabble. The numbers are going to excellent. The numbers are going to expand. We're in the crypto environment, and we're going to have billions of dollars coming in. We're going to have trillions of dollars coming in because people are going to want to make instant transfers of payments, and they're not going to want to go to a regular bank, and they don't really want security, and they're never going to get into this so-called decentralized government program. Really? So let's talk about it. First of all, the three-letter alphabet boys have already seized. They've already cracked down on these crypto guys. That's a fact. Oh, the three-letter guys, they came after these guys and they found out all the transactions. Right. Now, where's the privacy in that? We're done. We can end that conversation. Sayonara, finito. Because if the three-letter alphabet guys can find out that this person just stole $1 billion or stole $100 million through a crypto ledger that's supposedly private, it's not private, it's public. It's just under an auspice that, oh, we got the company in the British Virgin Islands, so the public market can't see it because we're not trying to say that we're a security traded on the public stock exchange. Yeah, that's what it sounds like. We're private, we're unregulated. That's true. You're not in an American jurisdiction. That's true. But you're not traded on an exchange either. That's true. You created your own exchange in the foreign market that's not American. That's true. And so what did the American states say? Oh, we want you guys to at least get KYCs of the guys, the small guys that are giving you money. Because a few of them might strike you rich. And a few of them might steal money from people. Because they're Americans. So guess what? There's KYCs on these guys. And they come straight after them and they bust them. Y'all, are they not getting busted? Let's talk about it. Oh, crypto's supposed to be private. It's supposed to be private. It's the off the ledger. It's not regulated. So how come the public people are getting in there and seizing the assets? Or suing these guys and getting hold of their names and their livelihoods? The guys that are stealing the money. This is OPM for you though, right? Oh, we trying to let the little guy get in the market so he can get in these real estate investments and he could get in on the crypto level. And we gonna give him a token. Right. But hold on. Are real estate tokens up or down? First of all, that's like asking you, are real estate tokens more popular than NFTs or are they more popular than the blockchain itself? No. It's just another dog. It's just another Doja coin. That's what it is. And we're not promoting it. It's not financial advice, not legal advice, but that's what it is. It's a come out of nowhere coin. And it's a nowhere coin. What is it doing? Is it a more tangible company than a Zillow? Is it a more tangible real estate company than a real estate company itself? Do you see any of these real estate companies just saying, hey, we're going to turn a coin on and we're going to have a coin and let people pay for the property to the coin? No, because it's financial laws in place. Now, whether you all know it or not, these guys aren't dumb. These guys that are creating these companies, they know that they can only take in a certain number of unaccredited investors. They, as investors on the onset, these crypto guys know that because they kind of know. Like they'll try to act like maybe they don't know, but if they're semi smart, they do go get some decent like lawyers and accountants around them, some securities guys to say okay, because they're basically trying to put together something that's not a security. So they got to go to the securities guys and say, okay, tell me how not to be a security, and they pretty much know how not to be a security, but they go to these guys and they say, just tell me how what I'm doing cannot be a security. Validate what I'm saying. This is called, it can almost be called almost intellectual masturbation. We can say this publicly with our voice. Our opinion has no need to change because we've already seen the market. It's been the same market since it started. The coins didn't change. The real estate coins didn't change. Nothing's changed, okay? The companies have changed, but what has changed about, oh, it's crypto, it's on the blockchain ledger. We're going to, what are these guys saying? These guys are saying that they're going to collateralize real estate through a coin, and now you're going to have the little guy, here we go, the little guy, you're going to get pillaged for your life. It doesn't matter if it's an exchange. It doesn't matter. We've been hearing about this since day one. We've been hearing about the mines. People have been selling almost commodity mines in this crypto space. They've sold these coins, and where are they? They are not up, they are down. Well, guess what? Go look at gold on the stock exchange. Did it lose as much value as these coins have? No. Did these guys tie their coins to tangible assets once again? Well, we did it in the real estate space. No, we're talking about the real commodity space, the mines. And where are the mines of these coins? Where are these coins at? Nowhere to be effing found. Y'all want to hear that? Because first of all, if that's the case, real estate has is there's been a slowdown in purchases, but the prices aren't like dramatically down. Like you talk to someone in real estate right now, they're not going to tell you like, "Oh yeah, we lost 30% equity in our house right now." They're not going to tell you that. They're not telling you that for sure. They're not. Like it's almost like you saying, "Well, hey, your house price went up in 2020. How much value did you lose from the 2020 valuation? How much did you lose from the 2021 valuation?" Most of them are not saying they lost 30% of the valuation from their 2021 valuation or their 2020 valuation. They're not saying that right now. Assets haven't like drastically depreciated in real estate. So when you so-called seen these real estate coins, these half-ass REITs that have went up, they really are not REITs because REITs are publicly traded entities. These coins aren't publicly traded, one, and two, they're not able to go into a complete REIT structure because when you talk to them, they're not a REIT. They're stealing money and taking it from Paul and giving it to Peter. That's the facts. They're not like really putting in tangible assets. Where are these tangible assets? Sure, we've heard it for years. Okay, you're not. You first of all, where do you hear the billion dollar real estate coin, for real estate coins? You don't hear them. These guys barely got 25 million in them right now. And that's a fact. And they can show us the numbers. Show us what you've collateralized in real estate with a coin and what transactions are happening or what's going on with these coins. Because this is the issue that we have with it. And here's the gag. First of all, they got the real estate, right? So there's a couple of kind of scams that are going on. The first one, and one of them that we can just think on top of our head that these guys are doing with this token crap. Oh, okay. Well, we got a token. We're raising money for the development of the property. So we got good developers. They gave us a great deal. We're the broker of a deal now, and we're taking money from investors. So now we're not just selling an asset, we're we're an intermediary. Oh, excuse us, intermediary, which is almost a bank because we're holding deposits for collateralization of a coin. That's what they're doing. They're holding your money, the little guy's money, for loan purposes to basically give money to these developers to do these projects. It's like, first of all, these developers, whether y'all know it or not, these guys actually have money. But you got these coin guys that say, we're going to be an intermediary. We're going to help you. We're going to help the GCs, the general contractors. That's what they're called. We're going to give these guys the money from the little guys. So we're a brokerage firm now. Okay. Okay, well, you also know deals don't always go through, and that's the case. That's the case. There's nothing more to it than that. So, what makes these crypto guys qualified guys on who's a quality GC and who's not? So, you have to do your background checks on, do these guys know the real estate market? Can they pick out good GCs? How have they vetted their GCs? These are things that you're asking them. Of course, they don't really have like that level of almost sophistication. Don't think these guys aren't smart. They're gonna hit you with the whoopity wop on an answer. But just know that yes, that's what they're telling you. So that's one crypto scam that they got going on out here. These guys are damn near raising money out of thin air for a contract that may or may not be even complete. So now you're the most, who you think is taking the most risk in this situation? The little guy, because they're the one putting up the money. But you're the crypto holder and I'm going to get an asset. So this is the scam. They say, so once you put up the money and you help us get the project developed, you'll be an asset holder in the project long term. Now, whether you know it or not, a lot of these guys are going through GCs. So they might even sell off the project. So you might even be a long term holder. You might get cashed out. So sure, you'll get, multiples over XXX. But do you even know the exit strategy of the company? Oh, some of them might have that level of disclosure, but most of them aren't that completely sophisticated. So it's a if and or but. You don't completely know if these guys that have these crypto coins are that level of sophisticated to tell you when a project's going to be completed, and there is no guarantee on the project being completed. And this is what we got to talk about specifically with these guys that go on specific crypto real estate scams. And that's the bottom line. Now they can talk all this stuff all they want, but there's a fact. Anybody in real estate knows that that contracts don't completely go through, and you have to be okay with that. But once again, the little guy is going to get the gaggle, no doubt about it. And so you're getting these scams popping up. Christian, I can't believe you're calling that a scam, and oh no, blah blah. How many deals have you seen done? That's what we're asking these guys. How many deals have you had funded and actually to completion? Crickets. You hear the crickets? They're quiet. Even the crickets are quiet. Because they don't need to cricket about something that's not even worth their time. Of course, these crypto guys, first of all, most of these crypto guys are rich in other things, and they'll tell you, oh, well, I got an Ethereum at $10. Well, if you got an Ethereum at $10 and you had a lot of money, millions of dollars, and you put in hundreds of thousands, it sounds like you extra money up once again. These are called the founder stock idea guys. These are the guys that get into the founder stock. They get in early. Okay, you're the early guy, but most people aren't going to see those multiples again in the later stages of these investments. But you got to remember, this is not what's called a legal investment. Crypto's not a legal investment. They actually, it's like, dude, how do you sit around and promote? How do you promote something that's not a legal investment? Oh no, Trust Christian have all said it. You're right. I be wanting to tell them to get out of my face. Get off the stage. Who are you? You're a nobody. How can you promote something that's illegal? Well, why do you think all these celebrities are being sued? Steph Curry's being sued. Tom Brady's being sued. Kim K's been sued. These guys have been sued. Floyd Mayweather's been sued. DJ Khaled's been sued. Lil Wayne has been sued. These guys have been sued over what? Promoting these coins. Oh, did we say it again? Did we drop the cat out the hat? Did we drop the cat out the bag? Did it happen that way? Did they promote a coin? They didn't just promote an exchange. They promoted coins. Whether they did legally or not, we're not saying that. What we're saying is that what speculation per the charges per these suits that have traditionally gone out, they've been speculation of or allegations of traditional marketing, which these are marketers. You heard those names; they are marketers, and so soliciting, quote unquote, promoting, quote unquote. They're the same thing: soliciting, promoting, same thing legally. And so you just hear these things that are going on and we're putting out the daggone gaggle because we're still sitting. It doesn't matter what level you're at. I promise you that. You promise you that, right? We're sitting around high net worth investors and you're still talking about this stupid stuff. And you got nobody that got enough courage to say, please shut up. Until you can prove your concept, it doesn't work. You heard $1 billion exchange just go under. That's like saying the S&P went under. That's like saying the Nasdaq went under. That's like saying the Dow Jones went under. That's like saying the stocks 500 or stock 600 went under. That's like saying even the Hang Seng went under. These are exchanges of companies. It went under. So obviously, if the exchange can go under, the coins that are under it can go under. Now, once again, we can blame, sure, mismanagement of funds, the one so-called guy of an exchange. Like, this whole space has been deceptive. The whole space is about transparency, right? It's supposed to be about privacy, but then it's about transparency. You hear the contradiction? They say it's about transparency, right? But then it's supposed to be private, right? Right. But it's not because it's transparent. Right. And then the guy that created Bitcoin, do we know who he is? No. We're done. This is how you know high net worth investors look at this as one of the biggest scams of our time. And the unfortunate part about it is you can't put your name on the guy that created the Bitcoin. You can't put, he's nowhere to be found. That's how you know it's a scam. Oh man, did you call it that? Blah blah. Did you feed into it? Blah blah. Did you? Hey, look, it's okay. Everybody's gonna say, hey, I'm living off of this, man. It's paying my bills, man. I'm cashing out in the dollars, man. Okay. And we also just heard an exchange go under. Not you, the beneficiary, the exchange. That's like the S&P going under for people's pensions and the stocks that they hold in Microsoft or the stocks that they hold in Tesla or the stocks that they hold in any Fortune 500 company or company 1000 that's on the exchange. No, that's not a big deal. That's not precedent. Well, first of all, it's not precedent on the public stock market because they're stocks. They're regulated. The black market is getting their ass handed to them. Whether y'all know it or not, supposedly it's supposed to be like a big like Russian like black market for the crypto. Do you really think the Russians are moving money through crypto right now? This the market sentiment of crypto should show you if they were the major players and they're not there. They're not there. If these guys in Russia were utilizing crypto and that's how they were moving money around, oligarchs, these billionaires, whatever, whatever, whoever now still put money into it, whatever. The Russians are out of the market, ladies and gentlemen. That shows you where wealth is being held. If this was the way of black money, black market money, and it was supposed to be moving around the world, and this is how the black market money was supposed to be moving around through the crypto, because that's what they say, right? But then the feds, every time something goes on, the feds are right there. They got the address to the people and everything. But it's supposed to be private. Yeah, right. It's not. So, of course, we're going to sound like the loud, bad position. But think about it. These guys have just paid for marketing. Think about it. They had an arena named after FTX, ladies and gentlemen. They had a public sports arena named after a company that's filed bankruptcy. Do you hear what we're saying? Do you hear where we at? Y'all just saw this big boy company file for bankruptcy, and they had a stadium under his belt. But I don't know. I'm thinking about OPM. What did they giggle and gaggle on? They took OPM. Is your family close to getting a stadium? Sam Bankman Fried's family, they had a stadium under their belt from 2019, and whatever they had the stadium name on there, whenever they painted their name on there, that's what they did. And guess what? They did it with other people's money. They didn't do it with their money. Sam Bankman-Fried ain't had no billions and no hundreds of millions to put up for his name on the stadium. But guess what? He used the little guy's money for the real estate investment. You hear how that works? And then 2 or 3 or 5 years later, he's what? Bankrupt. The company's bankrupt for your real estate token, for your real estate play, for the exchange. But you want to be in the black money market. You want to be in the crypto space. Oh, we could talk about this all day because it's been a giggle and a gaggle. They're just not laughing anymore. It's pointless. Sure, we're going to hear big money say, oh, we're putting money into, first of all, it's technology. So they're spending money, investing money, not spending money. They're investing money, first of all. The big money is investing money for the technology. We're just seeing a few newspapers show up, advertise, sell you false goods because they're like a Google. They're selling you marketing. They're marketing other people's product. That's what Google makes money off, marketing. So that's what they're doing. They're marketing these other pump and dumps. Oh, did we say it? Let's say it again. They're marketing other people's pump and dumps that are not regulated. And that's why you see the little guy losing his shirt and his hat. And that's why you also see now, how does an exchange go under? If the exchange go under, where the coins going to be? The coins got to be on an exchange first of all. And once again, the exchange had their name on the side of a stadium. But oh no, no, Trust Christian of all, you sound like the contradiction to the actual situation. They had a name on the side of a where's the vault? The vault is this on the side of a arena? Yeah, and we're not bankrupt. That's the difference. We're okay with clearing zero every year. They're not okay with that. The financial managers over on their end, they don't give a damn about the little guy. Because right now, their little guy they were supposed to be unsecured investors. Now they're actually secured investors per the 10K of the company. They're secured investors. You hear how the public didn't talk about that, but it's in their public release. So the OPM, whatever money they held on the exchange for through a time period, it's not froze. It's used as collateral in a bankruptcy proceeding. Trust Christian involved. What you mean, man? It sounds like you speaking at either high level or you just don't like the product or you don't like it. It's like it's first of all, the blockchain technology was supposed to be private ledgering. That was the giggle and gaggle that they still haven't kind of got over that hurdle. Where is the privacy in the ledger keeping? That's what we want to know. That's an easy question to be answered, first of all, because when you see these frauds that go on over this crypto environment, first of all, when you look at the investors have to sign a KYC, which is a know your customer. That is the gov trying to put in place some type of regulation to say, y'all need to know your customers. Why? Because you can't be, we almost need to know. So when these guys bring in a class action lawsuit against your daggone firm for stealing their money, y'all can have a record and stop acting like y'all don't know who these people are. Through a private market, through a private regulation. There is no private regulation. That's what they market this BS as. Oh, it's unregulated. No, Sherlock. Oh man, this is why. Which I mean, why we can't talk about. This is OPM at its finest right now. Like, is it crowdfunding or is it crowd stealing? Crowdfunding stealing. That's crowdfunding stealing. You don't hear Tide going under. You don't hear Clorox going under. You don't hear Procter and Gamble going under. You don't hear these Fortune 500s completely going under. They want a Fortune 500, but they're going under. What are we talking about here? They're not Blockbuster. They're not a 30-year-old company. The company just got their name painted on the side of an arena. Give us a break. This company just hasn't even been around 10 years, and this company is going through a bankruptcy proceeding. It's called a fraud from the beginning. Now, you don't want to hear that because you invested, and that's the facts. But we're going to point out the giggle and gaggle of the room because these guys want to sit in the room and actually Someone's listening to them. They're not. They actually are gonna. They're at a mute point right now. When you hear people talk about this whole crypto space, like the guys that are selling it, yeah, they're speaking with a point of excitement and enthusiasm. But the guys that have put their money in their savings, or people that have put their capital up and like they've lost capital in this situation, of course. People that were living off of this, of course. The asset has depreciated not just in commercial value or trading value, it's depreciated in value. Do you hear the difference? But oh no, no. We can't talk about that giggle and gaggle because we sat in an environment today where somebody's trying to they're raising money. Do you hear this? They're raising money. They're trying to get OPM. And this is what they're doing. I'm gonna go ahead and share it with you. For the go ahead and you can peep it out so you can start calling these goofballs out. First of all, this is how they market it to you. Hey, we're gonna have an unregulated investment so the little guy can invest in real estate. Do you hear the giggle and gaggle? We might repeat it a couple times so you don't get hoodwinked, shizzled, and shysted. Here we go again. Hey, we opened up a real estate token. We got a partnership with people. So we're going to give the little guy the opportunity to invest in real estate, the little guy, because they wouldn't have access to these bigger investments because they have to have all the money. So we're going to allow them to come in with just having, 10, 15, 20. We don't really need more than 25. Otherwise, we're going to have to call it a accredited investment. You hear the difference? Oh man, Trust Christian involved. We can't believe you said that. We trying to help the little guy out. We trying to help the little guy get into these investments. Oh really? And they're taking the little guy's money. We've heard people already say they've had a hard time cashing out of the NFTs. That's a fact. We've already gone to the crypto conferences. So we know at the vault. So we are in an environment with the crypto guys. And yes, there's a lot of issues with cashing out of the NFTs still to this day. What do you mean? The market has gone through for sure a restructuring. The market has gone through a slowdown in investment. It's gone down. It's experienced a lack of capital investment. So of course they couldn't just keep developing things. So whatever problems they had, they didn't completely fix them yet. They have to keep fixing these problems. They have a lot of structural issues with paying out with these NFTs right now. That's just the facts, ladies and gentlemen. We've talked to people that have NFTs that have created the NFT. And then when it comes to the transactions and the exchanges, these are real things. So when you talk about putting your money into something, your money, are you more cautious of putting it in these things than if you had a bunch of other people's money? Maybe you would be. Maybe you wouldn't. That's the question to be asked. Because if you're doing we seen someone type into the chat, keep your money on the private hardware wallets. And once again, we've already discussed that. Uh, eh, does the coin stay valuable at the value that you bought it at, even if you keep it on the wallet? No. You think we stupid? Of course we're not dumb. First of all, just listen to what's said there. The asset went down in value too. So let's just say you got the Bitcoin at 40K. It's not 40K right now. So even if you hold it on your cold wallet, it doesn't stay cold hard value, wallet value at 40K just because it's on your cold hard wallet. We're not stupid. That's something you got to talk to a unaccredited investor, somebody that's unsophisticated. That's not how this works. Because if that's the case, it's an asset. And if that's the case, it lost value. So just because you put it on a cold wallet, hard wallet, it's an asset. And the asset itself lost value, not just because it was exchanged at a higher or lower rate that particular day, because assets from day to day can be traded at different levels for sure. But the asset itself still has a value. The That's like saying right now gold's worth $2,000, even though on the stock market it might be worth like 1,800. Sure, It's traded in a range to 2,000, but the market sentiment might be 1,800. That's the general market consensus price. That's not the price that you could sell it for. You could sell it for more, but you're probably not going to sell it for more than the previous high. But the market sentiment is, hey, this is what it's worth. And then you could sell it for less. Well, guess what? Right now, Bitcoin's worth less than 40K. So you think you're going to sell a Bitcoin right now if you were to sell your coin at 40K? No. So you didn't gain value, you've lost value. But the numbers, they don't add up. The science, it doesn't add up. And this is why you just see where it is. First of all, they're not even regulated. At first it sounded cool to be unregulated because it was like, oh, we're going through this massive transition in the internet. Bull crap. It was supposed to be fintech. That was supposed to be the play. Fintech. Fintech. Okay. Well, fintech, the industry, fintech, just took a hit because an exchange went down. You don't hear that happening in regulated markets, specifically, at least in the public market right now. You don't hear that. These exchanges aren't going down, partially because they're regulated. Oh, well, the stock market's been around longer. That's true. But at the same time, these guys are, like we say, so what you going to say? Do these guys Are these guys managing securities? Because they're actually selling securities, whether y'all know it or not. They're, whether you hear the language, they're securitizing the coins. They're securitizing real estate. They say this from the sales pitch that they're pitching. They say it. They're securitizing. Like, what are they doing? Oh, we're cross collateralizing. They're utilizing financial SEC terms that are regulated terms, but they're trying to use it under many different auspices, i.e., blockchain. They're going to use the blockchain as their out. But once again, if the blockchain was private, which it's not, if it was private, how come every time somebody steals some money, they know where the money's at? They literally go after these guys with no hesitation. Sure, they might sit on them, but even in the most recent situation, he didn't need to run and hide. He just pretty much said, we mismanaged the company. We're filing for bankruptcy. $1 billion company overnight. We're filing for bankruptcy. How many people you think are trying to put their money on that exchange now? That's another question for you. How many people do you think are trying to put their money on that exchange right now if they could get back in business? You think this man has a good reputation for a crypto exchange? Clearly not. But there's a lot of guppies out there. A lot of guppies that will go right back into it. Just like this other company, Binance. You think we have an issue with throwing out these companies' name? First of all, Binance got kicked out of certain states at one point. We could bring that up. Like, specifically, Texas kicked it out and said, you can't operate here and try to swindle our mom and pops. You can't swindle our citizens because Binance is not an American company. Let's look that up. We'll confirm it. Uh, we gotta look for it. Just give us a second. Binance coin, because they actually had a coin and they're a company. Right. This company's look. They got this company located in Turkey. This is their corporate address on the internet. A company located in Turkey. Now we're not hating on Turkey, but first of all, when you when you look at that, once again, this is y'all can Google these stories. Just Google Binance in Texas. Y'all can see what's going on. So when y'all talk about, oh, do these companies are they getting enforced through regulation? Yeah, they got kicked out of states. So actually, we got a good question in the chat. We're gonna go ahead and address the question. So somebody actually said in the chat, it's a great question. What about the Federal Reserve version of a digital coin? So we're actually going to do an episode about this whole digital coin BS and this whole digital stuff. Like, first of all, your money digital. Let's go there. Y'all want to go there? See, this trust Christian involved, baby. This ain't no like we trying to go ahead and give you the political answer. Oh, there's this new technology that's going to make no paper money. First of all, you got fake pennies. They're not even copper. So you think they about to get rid of paper money? You're funny. You're funny like the money that they say is funny. Oh, the money's funny. Oh man. Well, we're gonna do some digital reserve stuff. Like, it's interesting to see this because, first of all, this is what they're trying to say. First of all, they're saying, all right, so, we sit around high net worth investors. We're talking about they. That's what we're talking about. We're talking about high net worth investors, people that have over $25 million, people that have over $50 million. They're putting money into these colleges so students can get an education to come out and work for these crypto companies. We're sitting in environments with these people that are talking about putting, $50 million into a crypto, anything, $100 million into this crypto, whether you're talking about development of the technology or otherwise. So, what they're saying is they're like, okay, well, the United States is behind. There are whole countries that have this whole technology in play already. But okay, what do y'all want to talk about? Y'all coming to the vote talking about y'all talking about taxes? Y'all want to talk about that? Y'all want to talk about ledger keeping, right? We already talked about it's not private. So the money that you want to keep private is not private now. So in the public ledgering system, right? Y'all want to go there? Let's talk about it. Federal Reserve money is the public money, correct? Correct. Oh, it's for public and private debts. Okay, let's talk about it. For public and private debts. Let's talk about it. So, okay, they're going to institute now this public ledgering system for public blockchain, USDA money, US Federal Reserve funds. It's like they should have been keeping track of the numbers, but clearly they haven't been keeping track of the numbers. A lot of money's been burnt, taken out of in it, put in and out of circulation. So, when you talk about, do you want them to keep better track of the money? That's literally what the blockchain is going to help them do. But they also are going to better track it through you, through entities. It's just a better tracking system. Well, that's advantageous to the government, right? Right. We can talk about that. How's that advantageous to you? But we want to develop the technology though, right? Right. You see who's investing in it? Rich people. Not poor people, but poor people are getting their money taken. They're not investing in it. They're the investors that are getting their money taken. The rich people, the wealthy investors that are putting in, once again, they're going founder stock position. They didn't really lose. Oh, I got it in the Bitcoin at 300. Yeah, it sounds like you're still up. Sounds like you're still up. Those are the founders. But you're hearing these giggles and gaggles, and this is what you hear. The environment is it's a wild environment right now, wild wild west in the states, man. But you hear sentiment from high net worth investors once again talking about other countries have adopted this technology and how this technology's well, we actually sat in a room today with an investor from India, and definitely probably huge in India. Definitely has $1 billion fund from India. Just huge fund. Probably represent quite a few wealthy families. Not even just one wealthy family, but they're invested in fintech for sure. A lot of technology companies. That's perfectly fine. You're going to see that across the board. They're trying to say, this is the, whether they're going to say, India is going to lead a revolution in fintech. Sure, we could see that. That's fine. We're not mad at that. But the purport or the sales of this whole Indian pitch was that they are operating not 100% through fintech, quote unquote, or through this. We're gonna go ahead and pull it up. Let's pull it up. We're gonna drop some jewels on the vault listeners today for y'all that may not know, because when you talk about, oh, who's getting the up to date knowledge, the vault's getting the up to date knowledge on being around high net worth investors. This isn't from the low level, let me get in and mom and pop it. We're actually talking about, from the fintech billionaires from India. what's the name of this technology? We're gonna go ahead and share with y'all what it's called. One second here. Yeah, gotta give us a second. It's called UPI, which are called Unified Payment Interface. So, Unified Payment Interface is an instant real time payment system developed by National Payment Corporations of India. So, once again, we're sitting in a room with these individuals. Um, they probably even had a major investment in this company, the guy, for all we know. But this guy definitely talked about unified payments interface, and they're talking about, oh, this is how the Indians are, they're doing peer-to-peer transactions, and they're not trying to use hard money anymore. First of all, India in the past 10 years has restructured their money system. So of course they're going to try to put you on an electric payment system so they can track the money. They if you go within the past 10 years, India has taken money out of the circulation. The government has. So they've taken money out of circulation, and of course, listen to the name of the company. That's the damn corporation that's trying to put you on, the little guy, the mom and pop, the little investors, put you in a unified payment interface. It's called National Payment Corporation. That's through private investors, ladies and gentlemen. These wealthy guys we're sitting in a room with that we're telling you they're developing a technology. That's not the little guy that's trying to invest in a token, trying to invest in a real estate token. That's not these guys. These guys are creating a token, the payment system that you're going to be utilizing with these so-called payments so they can track them because they're the national corporation. Remember, you hear that? They're not the mobily wobbly payment system. They're not the Google payment system. They told you they're the national because they're in the cahoots with the government. That's the facts. Of course they're in bed with the government. How you think they can exist? They got billions of dollars of innocent people's, common everyday people's money going through their system. Of course they got to be in bed with the government. They are. We're not mad. We're not hating. We're stating the facts. But this is supposed to be for the people, private people, peer to peer, without the government seeing it. But it's on a ledgering system that's tracked. And guess what? They're the National Payment Interface Corporation. Now the question is, are you going to start a company that's going to do this? That's the real question. That's the $1 billion question because they're a $1 billion company plus. That's the $1 billion question. Are you going to start one of these companies that literally gets in bed with the government and helps them start tracking where money is? Oh, is that a problem in the system? Well, didn't they just issue trillions of dollars into the system? Yeah, they want to track it now. Right. So why not get a digital system in place, which supposedly you think they don't, but they do. It's called the current money system that you have. The only issue is supposedly money is not supposed to be centralized, it's supposed to be decentralized. But they have central governments. Excuse us, they have central banks though, right? Right. So now you have these crypto goons that come in and say, "Oh, we're going to decentralize finance." Do you hear what they're saying? We're going to decentralize the finance. Really. But then they just got in bed with the government because they always snitching on everybody that commits fraud. Exactly. And then the government told them, hey, not only is it not going to be private, because that's what they are supposedly right now, they're supposed to be private. The government said, we need you to institute a KYC, which is to know your customer, and that's what we need you to do. See how the government had put that regulation in, and these guys fell in bed. Oh, we could get that. That's not even our information. We'll actually get more information from these people now. Sure, we'll catch the fraudsters for you. You hear that? We'll catch the fraudsters for you that are moving all this money through the private markets. Right. It has a dual approach because it's not going to just work in the private. It's what someone has tried to ask about. So they're going to track they're going to track everything, and then obviously the information is going to be available to the feds when the feds need to come in and get this information. That's just the bottom line. And it's interesting to see people's position with this, because of course it's an extensive dummy stick, because you got rich people investing in it, you got wealthy, you got high net worth investors investing in it. So how do you say, oh, how are you smarter than them? First of all, rich people make mistakes too. Yeah, quite a few of them have lost money in this, and quite a few haven't. That's fair. So that's the case. Yes, some of them get behind it and they start promoting it. Yes, but once again, the industry obviously is begging for regulation. What do you mean? We're sitting in a room with an environment where, of course, obviously they're begging for regulation so they can get more money invested in the environment. Of course, they're begging for regulation. They don't want to say it at this point. They know that's the black spot on their hide. They know that the crypto blockchain environment knows, like, man, we have to get regulated because right now we don't look trustworthy. We were supposed to be trustworthy. We were supposed to be blockchain technology. We were supposed to be secure. We were supposed to be private. We were supposed to protect our investors. We were supposed to protect the ledger. Whatever that is, y'all see what's going on. So we're seeing, that obviously, it's when we talk about asset protection conference and why you need to do the asset protection conference, or it's just like asking us why we had to go to this conference that we had to go to for the past few days for the high net worth investors. We had to do that because um, you got to get around people that are having these level of conversations. You got to get around people that are even investing in the things that you're talking about investing in, so you can see it from high levels, so you can see it from other investor perspectives. Sometimes they've invested longer, sometimes they haven't. We've had people come on the podcast here, had people come on the YouTube, and people that they're in these environments. We had an accountant come on. It's like, yeah, how do you account for this type of stuff? We had to interview these people that call themselves professionals that are trying to help you allocate your money, or saying that they're trying to help other people manage other people's money and all this other stuff. So we're looking to have those conversations. Bottom line, we're looking at those conversations, but these are very tough conversations. Especially when you're in a room or you're having a conversation with one-on-one or whatever. You definitely have to have that one-on-one time with that specific person in their investment, in their pitch, specifically in that crypto space, or somebody talking about, oh, I want other people's money in the crypto space, or whatever it is, because that's the case. These people are saying, oh, I want OPM, but then once again, the giggle and gaggle is that the little guy's getting their shirt taken, and it seems like that's what's been going on the whole time. You don't see wealthy people saying, oh, I really lost 80% of my wealth, or I lost all this wealth, or I became rich off of this and I lost it. Like, no, that's not the case. Most of the people that were so-called rich off it, they've kind of gotten washed out of the crypto. And then you see, even now, for our opinion, we've seen it, and we've seen it even to this day. We even in the room we've been in recently, it's like, look, we see these guys, they have money from other ventures. They're not 60% crypto. They're not 80% crypto. That's not the case. So they're raising money so they can buffer their risk, which generally in their portfolio, hey, we haven't seen anybody say that their portfolio is 40% crypto right now, and we're in what's called the crypto winter. We're going to do an episode about that, but 100%, we haven't seen anybody say that it's 40% of their portfolio. We've seen people who talk heavy about the portfolio, heavy, like, we're going hard for sure in the portfolio, but we have not seen people say that they have a majority of their holdings in it right now. And sure, they maybe have lost quite a bit of value in it, but that, once again, high net worth investors, high investors that have tons of capital, no, they shouldn't be thinking about or even wanting to lose capital in an environment that people want to call volatile. Say, oh, it's volatile. It's like, no, you just saw an exchange go under. It's not just the coins, it's now even the exchanges. Ladies and gentlemen, that is a red flag for investors to say, this is a red flag, period. The whole industry is considered to be a fraud. Why? Because the exchange that the coins were sitting on is a fraud. It's That's the bottom line. And so, no one wants to say that, of course, because we even sat in a room today with someone that said that what did they say? They said, okay, so the way you're going to sell their coin, here's the stupid questions that everybody asks. Well, how are you going? What are you going? You going to sell the coin on the private market, on the secondary market? Really, that's what they call it. They call it a secondary market. So obviously, they have the bigger exchanges. One of them just went under. That was just painted on the side of a sports arena, and then you get. They got what they're trying to develop. They're trying to develop secondary exchanges. That's what they're saying. You're gonna be able to sell it to your neighbor. Yeah, yeah. Do you hear how gaggle this is? You're gonna be able to sell it to your neighbor. No shit. If we could, oh no crap. Why would we not be able to sell it to our neighbor? That sounds stupid. But the point being is, how easy is it? Does your neighbor have to be on an exchange? Does your neighbor have to have a coin? Does your neighbor have to go through that whole process of KYC? You can't just sell your digital asset to your neighbor. This is the giggle and gaggle of it. You have to be a digital almost investor. You have to almost be there. You have to almost be a digital player. You have to digitalize yourself, as they say, or digitize your acquisition vehicle for assets. I mean, that's what they're basically saying, in so many senses of, are you in digital assets? And are you in the position of owning digital assets, or how do you control digital assets? It's like, right, how do you control them? Oh, somebody's gonna come up here and say, oh, you got to control a digital asset in a wallet. First of all, if it's an asset and we talk about value, and you bought it at 40K and now the asset's at 20K, how do you still have the same value that you started with? You don't. So it doesn't matter that you just held it on a cold wallet, hot wallet, lukewarm wallet. It didn't matter. The value of the asset went down. Somebody typed into the chat about WeChat, and like we say, we're aware of these companies, doing these transactions. But once again, when you listen to the volume, you talk about asset protection. How is it asset protection when you have to understand? Once again, these crypto companies are asking for regulation. KYC is regulation. Them knowing your customer is regulation. So what are you about to put on the paper? Your government name, as they call it? Right. Most normal people are going to put their government name. It's a way to track government people. It's not complete asset protection then. Why? Because if you get wealthy through this digital economy, guess what? Your wealth is digital now, and it's been tracked the whole time. It hasn't not been tracked. And guess what? These companies are in bed with the government. It's not an odd thing. You can't say that they're not. What are you talking about? The tech companies have to be in government with the bed because they're holding public information. Why do you think they have a privacy agreement in place? Oh, what does that to mean? We're not going to share your information. But somehow, every time these companies have a issue, the information specifically in crypto or blockchain is released to the government. Y'all need to, somebody can type into the chat where these crypto or whatever you want to call them, crypto blockchain companies that have these issues of fraud. What are you talking about? The feds be right there on it. The feds are right there on it. And that's because they're taking the common everyday OPM mom and pop's money through these exchanges. And it's sad because now we can almost say it's bleeding to the exchanges. It's not even just a pump and dump coin, it's an exchange. What a joke. What an era we're living in of unsophisticated investors or otherwise. And sure, we could say, oh, rich money's going in it. It's a ton of capital going in it from wealthy investors or high net worth investors. Sure, we've heard it. We're going to continue to hear it. Sure, oh, what they say, it's not going anywhere. How is improving a ledgering system not good? They're improving a ledgering system. Like, good gosh. They're improving a ledgering system. The internet is still the Wild Wild West. Of course, that's why it's called the WWW, the Wild Wild West. People set up websites. There's no regulation to it completely. This guy's website just went under and took mom and pop's money and called them. Now, you think those mom and pops knew they were going to be called secured investors? You think they read the 10K and said, yeah, I'm going to be a secured investor if this company ever goes bankrupt? Right. Why you don't see public companies going FDIC insured bankrupt? Hmm? Right. Because they got regulation in place. So that's why these companies on the private side specifically, and this is sad because we can actually sadly say this. This is private side stuff. This crypto stuff, this blockchain stuff is private stuff. And they're just, man, it's a wealth transfer going on. It's been going on, obviously, however long this blockchain gimmick and gaggle has been going on. It's definitely been going on. It's unfortunate. We've seen people lose their, what do you mean? We've seen people that were supposedly crypto millionaires and they're not crypto millionaires anymore. They were asset rich, quote unquote. Now they're not asset rich. It's supposed to be an asset, right? Right. We know people right now that are in real estate, they got in 2010, and 10 years later or 12 years later in 2022, going into 23, they actually have quite a bit of value. We have investors that bought in the last recession. We have investors that bought in the last downturn hard real estate tangible assets that are actually asset rich right now. Actually, they're asset rich. Quite a few investors are asset rich and they're trying to sell right now. So, okay, you think they're trying to compare crypto to real estate? No. They're just trying to tell you that we got crypto real estate investments that aren't regulated. Right. That's a scam. But oh no, no. Don't call it that, Trust Christian Vault. Hear me out. I've been successful in real estate. We don't give a good goddamn, okay? Because we haven't seen any of them work yet. Oh, these crypto funds, these crypto funds. Let's talk about it. These crypto funds, they're raising OPM. That's what they're doing. But whose money are they raising? Are they raising rich people's money or are they raising poor people's money? Are they raising rich people's money or are they raising the little guy's money, the mom and pops guy's money? Whose money are they raising? Let's talk about it because we could talk about it from multiple positions at the vault. Because we could talk about it from the little guy trying to raise money, blah, blah, blah. But we're talking about now the scams of the era. No, no, no. This is for sure the shining star of scams. Why? Because it's sitting in front of your face. You've heard, first of all, Warren Buffett didn't say he was in it. That's supposed to be one of the most iconic investors of our time. But oh no, no. Supposedly he's an old guy. He doesn't know anything. That's what they say in the public sector. Yeah, right. Warren Buffett is considered a legend. You know how many millionaires Warren Buffett's created? You know how many millionaires Microsoft has created? You know how many millionaires have been created in real estate? Right, those are real millionaires. You understand? Like real tangible. We actually know people that weren't millionaires, but they bought real estate in the downturn in 2008, 2009, 2010, 2012, and literally they're millionaires because of equity value right now in the real estate. They sell their properties, they're instant millionaires because they got that much equity in it. But the crypto is different. Supposedly it's different. Okay. Supposedly it's different. Have you heard any of these crypto real estate funds that have been around for 10 years that have gone up? They've had 10 years to do it. They've been on the bull run, let it be told. How many, where is that in the forefront? First of all, real estate is supposed to be one of the biggest investments for any wealth preservation tool. But how come those assets haven't taken, haven't, has, why hasn't that cream rose to the top in that specific asset class? Why hasn't a crypto real estate fund rose to the cream of the crop, $1 billion fund? Because they're not investing. Because they ain't bought no assets. They took money, but they didn't go buy the property. Did you hear that? Did you hear that? But what do you say? But that's all, folks. That's what it's called. The giggle and gaggle. That's the that's all, folks. That's what it's called. Because if these funds, like I mean, you've heard of crypto real estate funds for sure since 2000. Like they've been around, ladies and gentlemen. Let's not say they haven't been around. Oh, now they haven't been around. Okay, so when are they gonna be around? Oh, we're starting them now. Right, right. Okay. And first of all, Real estate's not losing the value that the crypto coins are losing. So we should see some crypto coin funds not losing the value that these normal coins are losing. But you don't see the funds that are real estate up in that space. We don't see it. We're sitting around them. We don't see it because they're dog crap. And the guys that are selling you this are dog crap. It's hard for y'all to hear. These guys are Nigerian scammers. That's what it's called. That's a what do they call it? A bad stereotype that floats around in the financial community. Is that, oh, you're gonna get an email and somebody's gonna say, oh, invest in this mine that we have. We got this gold. We just need your money to dig it up. You hear that? Oh my gosh, man, this is one of the biggest jokes, man. We sit around these guys, you're goddamn clowns, man. Give me a break. Clowns. To the nth universe. And we talk about it because they're raising OPM still. Still to this moment, these guys are out here ducking and dodging, out here raising money for this crypto garbage for real estate, out here trying to raise money. Like, what are you doing? Where's the funds that have worked? There's no template that it's worked. So how are you guys still out here raising money? You should be ashamed of yourselves. They're not because they getting little guys money. Little guys don't have time to do research. They ain't got to do a background check on these people. They're just going to go get your favorite celebrity in front of the product, in front of the coin, in front of the service, in front of the exchange. First of all, FTX had his name on the side of a sports arena. First of all, what are you talking about? What are you talking about? They had the name on the side of a sports arena. These companies, we told you, these people that are running these crypto companies aren't stupid. Appreciate everybody for tuning in live, listening, replay, especially this episode. It's been a great one. We wanted to talk about it because we could talk about it from multiple angles, and we like talking about it. But we know we honed in on one position, and that was one of the biggest scams of our time. And it's unfortunate because if we ever have to change our position, it'll be a great laugh that we have to change our position. But as it stands right now, hey, if we're gonna err to the default of what an old guy, Warren Buffett or some other rich guy like a Warren Buffett or a Charlie Munger or a Ray Dalio, these guys that have, basically billionaires in the financial space, and they're gonna sit here and tell you that this stuff is pretty much dog crap. But you're the little guy, and you think you're gonna be smarter than the guy that has tons of capital, because he looks like he's gonna croak at any moment. Hey, no worries. If you think that he doesn't have his wherewithal, then that's like saying that his fund wouldn't keep growing every year or he wouldn't keep making money. He is the head of the fund, so he's the leader of an organization. So it's just interesting to hear people take opposing positions and try to get these tchotchkes funded. And yay, that's what we see. We say that they're tchotchkes, and once again we look for our quote unquote contenders, the people that are raising these funds, to say, hey, we have a template for ourselves, or we've seen a template, because we've sat in a room with plenty of people that have a mine in Africa, a mountain in Africa, some dirt in Africa. um, of course, these funds have real estate in many different places. But we understand that it's even a bigger scam because it's under the auspice of crypto, it's under the auspice of blockchain, and so they're stealing money a lot easier than just saying, yeah, we got some gold in Nigeria that we're trying to dig up. Can you send us money? They're trying to market it as we're a token, we're a coin, you're gonna get value through a coin now. So it's a little bit even further arm's length distance for these thieves because they put paperwork up. They're making you do KYC, saying you acknowledge that you could lose your money in this investment, and then bam bam, they get the money, but really they don't go dig up the gold because they might not have regulations. They might not be sanctioned. They might not even be a legit miner. They might have just did that to raise money to go get the license to dig it up, and it may not even be there as much as you think it's going to be there. The reports could be off because you don't know the reports of how to actually do the research. Remember, they're marketing to the little guy to say we're credible sources. First of all, the exchange has gone under, a major exchange has gone under, and multiple coins have gone up, been pumping dump schemes. So it looks as though this unregulated market is very much so unsafe for the mom and pop investor. It's very much so unsafe for the unsophisticated investor. Why? Because that's who's usually going to be hurt the most. That's the unfortunate part. Bottom line. Not even just the guys that are promoting it, but the people that are actually putting up the capital, the OPM, the little guys, the mom and pops, the everyday guy. And that's why you see the states, that's why you see these places put these KYCs in place, because if you try to sue these companies, now there's a paper trail for the state. It's like opening up a corporation. If you open up a corporation on any state level, you're going to have to file the paperwork. Right. So they wanted to, you call it tokenize. What they really want to do was industrialize the citizen. It's industrialize you. It's digitize the citizen. How do you digitize a citizen? How do you digitize that? How do you track their transactions? It's really that simple. And clearly, somebody typed into the chat India and China, which has a billion people in their country, clearly they have a population control problem. So they're trying to track their citizens in a financial way, not just a economic, and not on a human level, but on an economic level. And so here you go, Americans. Isn't this what you want? Pseudo transparency, quasi transparency. I mean, no, quasi privacy, pseudo privacy. Right. These companies are supposed to be what? Private. They're not. They're in bed with the government. As soon as they go under, they're in bed with the government. As soon as they have to show something, they're more in bed with the government than the Fortune 500s and the banks, and think that they're not. First of all, these are private financial intermediaries. First of all, they're doing something that's illegal. You think they're not talking to the politicians? That's why they are paying to talk to politicians through lobbyists and X, Y, and Z or otherwise. They got to do that. Why? Because they're doing illegal activities. That's why. They're just saying that it's unregulated. Really, it's called illegal. It's not legal, it's illegal. But they're trying to legalize it, which means get it regulated. They're trying to legitimize it through regulation. Alrighty, well, somebody's typing into the chat quite a few different things, maybe things that we may not be completely abreast of. We see some different things, but nevertheless, we appreciate everybody for tuning in live, this replay. We know we did the episode a little bit longer than normal. Obviously, these are things that we're going to be able to talk about privately at the private asset protection conference coming up. Feel free to reach out, Christian at trustchristian.com. We look forward to hearing from you, Christian at trustchristian.com. Um, so we look forward to hearing from you all once again at the workshop, St. January 1 day, 9 to 5, January 14th. Look forward to seeing you at the Miami airport area. Location will be disclosed after payment is made. So look forward to hearing from you. Peace and joy.